I have a great deal of affection for this part of the world. I came to this campus, actually was transferring to one down the street a bit in San Francisco, 1969, when my parents moved to the Bay Area, and everybody in Illinois wanted to go to California because the Beach Boys told us this was where we had to be. And so I came out here in '69 and didn't know a soul, and ended up in a brand new apartment with a couple of roommates. One was from Haiti, Souchet Louis, I remember him. Another was Gavin Manjikian. He was from, I think, Armenian or something. And that was my introduction to Davis with two new roommates. And from there, it was a great 2 years. I spent another year afterwards here. I was fortunate enough to have a bad back, and it kept me out of Vietnam. So I ended up finding that out in, was it January or August of '71 when I was going to law school, as we all did, to postpone our time in the lovely eastern part of the world. And stayed around here, and then ended up, I was a referee. I did college basketball referee, so this was great home and great times. And I knew I needed to go back and get another degree because I was a history major. And still to this day, I'm a history major. And I chastise all you youngsters in the room, you have to read. You have to keep up with the world. If you don't, it'll pass you by. And so what you're going to see here is a segment of history that I've lived through, but it's really indicative in many ways of the U.S. economy and what's happened in the last 50 years. And it's been the most transformative time in the U.S. economy, in the world economy, when you see what really has happened if you step back and look at it. The airline industry was part and parcel of the whole deregulation of the world. So let's see if I can get this to work here. Little background, this is the economic history. Those are the three carriers I've been involved in during the years, and some topics involved in that. And then I want to mix in a little bit of history and some economic history as well. But I spent the '70s just kind of wandering around. Couldn't get a job. Those of you that lived through the '70s knew how tough it was. People think the inflation period the last 5 years was tough. Lived through the '70s and inflation and interest rates at 21% for short-term money by 1980, and housing mortgages 15%, and inflation in 1980 was 14%. Mr. Volcker comes along and puts the squeeze on, and the world starts turning around, and that squeeze was the start of the greatest accumulation of wealth in the history of mankind. It really kicked it off, but the reason, so you go back to some history, I think part of I'm very curious as to what caused all this wealth creation right now. Why now in the history? Why not in the 50s or 40s and so on like that? And I think you can look to one of the keys was regulation. The 1920s, you never hear people write about it. It's kind of an out of sorts period with economists and historians, but they had a 40-some% growth rate in the 1920s. All these new technologies came together, motor cars, electric. They had engines that were built to run electric, so factories now got incredibly more productive. All that stuff was available in the 20s. But then, of course, you had the Great Depression, and as you can see that bottom line of Mr. Roosevelt's famous quote was, "You can't trust business to run something so important as our economy." So you end up with these regulations that you see on those. You older folks know all about this stuff. Glass-Steagall, the CAB, the Civil Aeronautics Board, was created in the '30s. You've got Trucking Airline, Securities and Exchange Act. They put the fox in charge of the hen house when they put Mr. Kennedy in there after he knew all the tricks to how to figure out that stuff. So all the '30s, puts these regulations, and government is the wise people on the hill that have to tell us what to do. You go through the '40s and World War II and into the '50s. And by the time you get to the '70s, you've got AT&T and the FCC. Well, AT&T is a complete monopoly, and guess what? AT&T can hire much brighter people than the FCC could. So people finally figured out that the FCC wasn't running the FCC, AT&T was running the FCC. And so that's indicative all through a lot of the regulatory stuff. And in the airline space, you had a couple of carriers started up, PSA, those of you that lived out here. If you flew intrastate, the feds couldn't cover you. So Southwest started in 1971 in Texas, in a big enough state where they could fly intrastate, and you had people with $15 fares, and they're making all kinds of money. And meanwhile, all the regulated people, if you wanted to change a fare in the 70s, you had to go to Washington, D.C. with your lawyer, your economist, just to change a fare, let alone get a route. And so the whole route structure and the whole development of the airline industry, if you could fly, you were a rich person. It was not people dressed up. I remember I flew on an airplane and my mom had me in a little coat and tie and everything, and it was the luxury way to travel. It was not meant for the average person, and that was the time of the bus industry. And more importantly, people stayed closer to home where there, you had your concentration of community. So you'd take a Greyhound or a Trailways, and the old joke about anybody coming down the road, no, it's just a dog. And after they get hit, and he goes, yeah, Greyhound, this the thing. That's younger people don't get that one. But the airline business was being seen successful. The trucking industry was really being regulated. You had price controls by Mr. Nixon in 1972. Old oil, new oil, disintermediation, those of you that understand that term, where you had caps on what interest rates could be paid by banks. But some of them were charged with that, so as the interest rates rose, people would take their money out of the banks and throw it into savings and loans. Well, the banks were sitting there with upside down because all their capital had left them. So all this stuff was just sitting there, and finally there were people writing articles, intellectuals, that started saying, is regulation really what this government should be doing? So you start having deregulation. Mr. Carter, and you would think that the Republicans would be the ones doing it, and in fact they were not. It was Mr. Kennedy who really fought for airline stuff. One of the few industry or government agencies that got taken down was the CAB. Got sent to the backyard, and they brought on the DOT. All of these things were going on, and this took place starting in the late 70s and into the early 80s. And the stuff you see up there, trucking, airlines, oil, banking, you took care of the interest rate caps. So now all of a sudden, here's the U.S. with this ability to go do things and not have to say Mother May I to the Uncle Sam. And then you put it together with the interest rate changes that Mr. Volcker brought on. He was appointed by Jimmy Carter in 1979, and he immediately, attacked inflation by interest rates. So we all lived through that, the older folks, and you stopped buying things by 1980, 81. Why did you stop buying things? Well, in inflation, you buy things. You don't hold on to paper. You don't hold on to money. It doesn't mean anything. Go to Argentina or Brazil and see if you want inflation. I went down there to buy some airplanes in the 1980s, and they were walking around with wheelbarrows of money to buy food and stuff like that. So inflation is critical to the success of an economy and the like. But first you had to break the back of it, and that happened in the peak 1981. Mr. Reagan was elected in 80, and he suffered through a recession and the like through 81 and 82. But what happened in August of 1982, I'll never forget this, the stock market on like August 12th had a World War II headline, Dow up 36. Well, that's a rounding error today. Go back to 1968, 69 through 1982, the Dow literally touched above 1,000 2 or 3 times. It was 700, 800, it was 777 on that day. So I went back and checked. We were able to take a company public a month later that was a terrible company, but the market was able to absorb it and do things that had not been done or seen in years. And that was the start of this, what you're seeing today. It's had its ups and downs. 1987, you had a big crash. But if you remember that was a big crash, but it didn't affect the economy very much. We recovered very quickly from it. What you didn't recover quickly from was 2006, 7, and 8, because that was a debt crisis, not an equity crisis. Debt's 10 times the size of the equity markets. So those are the Fed's obviously very critical in that area, and the housing and interest rates were problems in that situation. But from 1982 on, the marketplace has really, produced an incredible amount of wealth. So all this deregulation is, I think, the backbone of where we are today. And mind you, the world had to follow. When the U.S. starts flying over there using airplanes, if you're not allowed to come and go at the same way, you're getting behind the power curve. So I already talked about some of these things. The Dow, that's the latest number. It's 50,000. It's a staggering number. I'm not sure what you do with that much money, but you're starting to see this wealth really, kind of change the way people have to do business and do business. There's so much wealth at this point. People are buying sporting franchises. They're paying $6 billion for the Boston Celtics. They're paying $10 billion to the Lakers. And my analogy to this is, it's like the bear and the salmon in the stream. The biggest bear is standing over the top of the stream. He gets his first choice of salmon. Well, guys at Wall Street, and they went in there in the 90s, and they started doing these PE firms, private equity, and those types of things. And they're now in their early 50s, early 55, and they're walking away with a B behind their name, and they've got to do something with that money. They're doing all kinds of things that, we as average people wouldn't think about. They pay, I know a gentleman who's got an auto manufacturing company. He rebuilds used Porsches. He's charging $3 million for a used Porsche. That's the kind of stuff that's happening today. It's not productive per se, but the money has to go someplace. In the airplane business, all of your leasing companies today that are buying and selling and trading airplanes are owned by private equity firms. What better asset, if you have lots of money to own, than a $50, $60, $70 million, Airbus or Boeing airplane? It's a lot of money. It's mobile. It's not glued to the ground. So all these types of things are seeing the benefit and to a certain extent the hurt, if you will. So my career, 1970s, I floated around. I did a little accounting for a couple years. I knew I would never be a CPA. I never took the exam. It wasn't my cup of tea. Ended up at a company called ITEL in 1978. ITEL was the man of the hour in leasing in the San Francisco. But also they passed the Deregulation Act for airlines in 1978, October. And I look back on my own career. You always have these kind of interesting things that move you. I can remember my old man taking me down to the airport in Kansas City where we lived and watching airplanes take off, and I was fascinated by that. And I was driving a asphalt truck, and I was 19-year-old in Chicago. And we're on the O'Hare Airport, and the 747 was launched in 67, 68. And this is a massive airplane compared to anything else. And I'm on this runway extension, and here goes this airplane taking off over the top of me, and it's like a shadow just sat there. It just didn't move, and you just you look up and you're looking at the belly of this airplane that's 200 feet above your head, and you're going, okay, that's impressive. Right? How do you do that, right? So, while those things stuck with me, in 1979, a fellow I was working with had come from Hughes Air West. Another friend of his he knew, and the three of us, left in July of '79 to go in the airline business. And we entered an ad in a newspaper, if you can believe it, looking for an airline management team. Okay, that's us. I couldn't spell airplane. I knew one when I saw one, but that was it. And we showed up in Santa Rosa, California, for this little company that was, just a startup. It was a function of deregulation, and it was so small and backwards. If you can imagine, the way we took reservations was what are those things you put on a table, a daisy, go round and round. And if you called for a reservation, we pulled the card that was the date that you would fly on, and we wrote your name down. We had no electronics, anything. So this company was a perpetual money loser. We got there, we knew we needed money, and I was the finance guy, so I worked on raising some venture capital, went to New York, and found $1.5 million from a firm, and we closed that in October of '80. And that was to launch a jet airline and also this commuter airline. So the term commuter means small airplanes, jet airline means jet airline. So this was the commuter business was the small business from small cities that fed into the bigger cities, so the Chicos of the world could have service. So we just kept going. It was a money loser. I am blessed with the fact that I didn't worry about it. We were bankrupt multiple times. Didn't know where payroll was coming from. There's a sale leaseback transaction in the aviation industry today. We invented that back in 1979. Part of the thing was you had ITC, investment tax credits. That was part of the problem with inflation. People bought things, you got a tax credit. It wasn't a deduction, you just got a credit. So we were able to sell a lot of these airplanes, oversell them, take the money out. That was our working capital. So it was not a long-term business success story, but it was something that got you from here to there. Fast forward through 1982, we raised another $6 million. We brought a CEO in because our white hair wasn't white enough at that time. And we were ready to launch Pacific Express. And Rao talked about the controllers. President Reagan fired all the controllers in August 1st of 81 when they went on strike. Well, every airport in the country became a slot-controlled airport, where today there's slot-controlled airports, or Washington, D.C., and LaGuardia, and a couple of those. You couldn't just go fly. You had to file your schedule. And a great anecdote was we filed a schedule in September for a February launch, and it came back and said, your schedule's been approved. Great. We're different than everybody. We got this. A couple weeks later, the chief operating officer's talking to an FAA guy, and he was bragging about it, and he says, well, let me see this thing. Shows him the telex to show you how long ago it was. And they left out a key word, not. So there's us, LA, San Francisco, flying Chico, Oakland, Palm Springs. Ain't exactly your prime marketplace. So we divided the commuter business, the small airplane, up into that side, and then we had the jet business. And the jet business was a terrible business, shouldn't have ever been put together, had a bad business plan. You name it, we did it badly. My partner and I, though, figured that out by October of 82. As I told you, we went public. They fired the chief executive officer, kicked him upstairs, and they had the commuter business and the jet business. And the new guy running the jet business wanted to get rid of this business. So my partner and I talked him into that we got to raise some money. And to Rao's comment, we had to get $100,000. Talked the guy into giving us a $50,000 letter of credit, which was acceptable. And then we had to come up with 50. And I didn't have two nickels to rub together. And so we talked a banker friend into a $30,000 signing note. My sister lent me $10,000, and we each managed to put $5,000 on credit cards. So that was us, broke. And what you had back then to sell was time. When you're in the late 20s, there's always more time to go get a job. No family, that's when you have to do that kind of stuff. But we closed on that deal in January of 83, and where timing was perfect. You had no hub and spoke business model before deregulation. So what's hub and spoke mean? Hub and spoke means you bring things into a central area, crisscross, efficiency, and go out. Fred Smith started FedEx in 1973. Where did he go? He went to Memphis. Why did he do that? It's in the center of the country. It's got good weather, and he can build his hub and spoke. So every Federal Express package virtually goes through a Memphis to be exchanged if it's domestic. The hubs started coming in 1979 and after. Dallas, hub cities are best in the center, right? Chicago, Dallas. Atlanta's a fabulous hub city, probably the best because you can both do east-west and north-south. All of that started getting built up, and they needed people to feed their hubs. So out here, San Francisco was a United hub. We were the little guy up in Chico at this point, and everybody else was failing. There were multiple failures. Deregulation was working, right? So we went up with these little airplanes and got involved with United in 1984, and we went from a couple $1 million business to that. Now that's a lot of numbers up there, but that right-hand column has big percentages. That's from 1985 to 1991, 92. We grew to be the biggest commuter in the country. We were out of control. I was the finance guy. I had no idea. It was running over the top of me. But working capital, we left all of our working capital because of the way the system worked with United. We were United's partner. So the way things got sold in travel agencies, the first carrier that was the ticket got plated. They got the money. So if you bought a $500 ticket and $100 was for the first flight, the Uniteds of the world would get the $500. And then as the other two or three, there were 4 flighters, the other 2 or 3 or 4 were pulled, you would bill United back for it. Well, we as the commuter never got any money, even though we may have been the first one from Chico to San Francisco. So our receivables were like a 50-day receivable. So from the first of a month, we got paid on the 28th of the following month. So as we grew and those revenues grew to $300 million, all of our money was sitting in United's bank account. So it was a real exercise to try and stay up with your working capital needs. And, but we made money almost. And then 1991 came, the Iraq War. August 1st, oil was, 75 cents a gallon. On August 2nd, it was $2 a gallon. And instantly the business was in trouble. So we managed to save it, and we did some hard thinking. We sold off some pieces, and then we finally sold the business in June of 92. And I was done with California. I fed up with the rules, and as a business person, loved the place to live here, great people and the like. Moved to Las Vegas and was very interested in doing something else. Had a very good friend, partner named Robert Pretty, who started a company called Atlantic Southeast Airlines in Atlanta. And he had sold out, and so we felt that there was an opportunity, and so we started looking around, and we met a fellow named David Neeleman. If you heard of JetBlue and now Breeze, David, I've met some ADD people in my life, but David is still at the top of the list. And so there's stories that I won't go into, but brilliant guy, good look around the corner and really see what to do. So Pretty and I decided that we were going to do something, and we all got to choose one thing. And Pretty said, I want to go to Atlanta, because he knew the Atlanta market, take on Delta in their hub. Mind you, Eastern had failed in 91, 92. And those of you that know the Atlanta gates, there's the train that goes from A, B, C. The C concourse was closed, 40 gates. The number one variable in the airline industry today is real estate. It's not airplanes, it's not anything else, it's real estate. If you can't get a gate, you can't fly. And the game today is you never let a gate go unused. You particularly the big guys, and if you're an airport manager, you don't mind having Delta owning your gates, right? But good luck for a small guy to come in and try and get access. Well, those 40 gates were a tremendous opportunity. We started off with this company, and my shtick was that I wasn't going to do this unless I could put my automation in. What do you mean by that? Well, remember I talked about, ticketing in the airline industry is all paper. Those of you old enough remember paper tickets, right? And you get a 4-flighter. Well, there were 3 or 4 people involved in that. You had the travel agency, you had the airline, and you had the customer. So you'd write through 7 pieces of paper. They'd have the carbon. And you as a customer would walk out with 4 tickets. If you're going Chico, San Francisco, Chicago, San Francisco, Chico, each one of those is a leg. And so you would get that ticket written to you. The money would be collected by the travel agency. The money would then go from the travel agency to a clearinghouse that was set up, which would then go to United, American, or Delta, whomever. Meanwhile, as you traveled, that coupon would be pulled. And so you had the front end where you had to put that on the books as a payable to somebody. Then you had to go back and touch it again when the ticket got pulled. And that may not sound like a lot to you guys, but today, one of the things we invented was ticketless. I didn't need to, United, American, and Delta did that stuff because these systems were built in the 60s and early 70s when they had 8-bit systems. They had no room to put in all the money. Furthermore, credit cards weren't that big of a deal at that point. So by the late 80s, early 90s, this fellow who worked with me in Fresno, he built our operational system and wrote all kinds of good software for us to run the airline. The front end was all controlled by United. But when we went to Atlanta to do ValueJet, he wrote the front end, and we started out with a fully ticketless system. And you called up, we got your name, we put your name in the system, we sent your credit card to whomever to clear it. And when you showed up, you said Gallagher, we hit you, the G button, the manifest was already there, accounting was all done. We had 3 people in accounting for a $10 million a month business. It was just revolutionary what ValueJet was able to do. And we did some really creative stuff with what we called the critter, and we took Atlanta by storm. Mr. Sherman has nothing on us. Those of you know your Civil War history. So we talked about the innovation, and we were the first fully ticketless system. The company went on and had tremendous financial results. In the third full year in 1995, you can see the numbers, $368 million. We made $68 million after tax. That was unheard of numbers in any business, let alone the airline space. And we were going great. We 51 airplanes after 3 years. We had taken over. The map was, we were coming, and the big guys didn't quite know what to do with us. We had an incredible cost structure because we were very efficient. We figured out we didn't need to fly every day too. We didn't fly on Tuesdays. Through the years, as I've asked all our new hires, how many of you want to start your vacation on Tuesday? I've had one person raise their hand, thousands of people that I've been in front of. So, you fly when people want to fly, and that's a Thursday, Friday, Sunday, Monday. Occasionally on holidays, Christmas and the like, you'll have a Monday or Tuesday, but it's not something you do every day. So we were off to the races. And then we had our famous accident. I'm sure many of you know about that accident because it was the talk of the town. It became incredibly, big news, unfortunately. And I'll talk about some safety in just a minute. But we had an airplane on Saturday, May 16th, took off from Miami and ended up in the Everglades. The people who were doing our maintenance down the airport area in Sabertech had taken an air, for the drop-down oxygen generator, and they were very toxic things because the way they produce the oxygen is when you pulled on that thing, created a chemical reaction that it was 500 degrees. And so you used them once and threw them away, and under regular maintenance, you had to get rid of them. So they changed them out. They were laying around the floor. Any airline that wanted to use an MRO or a third party to do it had to come in and inspect. They were expecting Continental Airlines to come in. So these things were on the floor, and the supervisor comes by, what's this? Well, that belongs to ValueJet. Well, get it out of here. Every chance they had to do it right, they didn't. There's special things you put in there to deactivate them, how you package them. They threw them in a box, walked them over on a Saturday afternoon and put them in our belly of our airplane. We probably should have looked more at what they did, but we didn't know what they were, frankly, because we didn't open it up to look at it. Airplane takes off, jiggles, things turn into hot, and they're sitting on a tire. Smoke is in the cabin and takes the crew out. So 110 people are killed in that terrible tragedy. During that time, let me talk about, this is the curve for safety in the airline industry. 1970s on the left, all the way over to here. There's 3 things up there, maintenance, pilot error, and other. Pilot error, by a margin, is the #1 history of aircraft accidents. There's one famous one. There was a DC-8 going into Portland, Oregon in 1978, 3-person cockpit. They have an engineer. And the landing gear light didn't come on. And the captain just kept his head down and was trying to figure out what was going on. And meanwhile, the engineer's in the back saying, sir, we got a problem. We're running out of gas. The pilot ran the airplane out of gas because he was worried about the landing gear light. Well, what did they do then? They developed what they call CRM, cockpit resources management. You have people are equal in the cockpit. This idea that the captain is, a god of sorts. You've got to be able to talk. You've got to be able to deal with it. And frankly, it turns out in Asian cultures, that's a very difficult thing to do. There's been a number of accidents in Korean and things like that where the poor co-pilot is afraid to talk to the captain, when there's a problem. They've flown an airplane into the mountain and, things of that nature. But in this case, you can see that all the pilot error on the left-hand side, that orange one in 1979, anybody remember the American accident? That was a DC-10 that crashed in Chicago because of maintenance error with the left engine. I actually was in Chicago that day and looked in the cockpit of that airplane before it took off. Let's talk about happenstance. And we took off, and there was this black cloud of smoke that we flew over. I didn't think of it. I was on an American airplane flying to San Francisco, and get off the airplane, the cameras are in your face. Oh, what do you think of the accident? What accident? What accident? So anyway, see this period in 1994 to 97, the aberration? There were 10 accidents from 94 to 96. 750 people were killed. American flew a 7.5 into the side of a mountain. TWA had an L-1011 explode after takeoff from JFK. US Air had a couple of airplanes that were problematic with the rudder on the 737. ASA had a problem with a turboprop. Delta lost the motor on takeoff, killed a couple of people. So that was an aberration. The only company that got taken down was ValueJet. in that period. We were in that 96 period. So it was a political issue. We had never gone and put any money in the bank, and we couldn't get off the front page. So it was a rough time. And, the company went out and bought another company called Airtran, if you're familiar with that name, and we rebranded it. And we sold that company, or I wasn't there anymore, in 2010 or 11. It got sold to Southwest for $1.3 or $4 billion. So it was still a successful company, but it certainly was not what it was before the accident. But I find this, if you think aviation travel is unsafe, the numbers say otherwise. It's really become, the only thing we sell is safety. If we don't have the public's trust, they're not going to get on an airplane. And the industry works together with everybody to make sure that we take care of it. There's just nothing that you won't do to make sure you get that airplane safe and sound to the next generation. Allegiant. That gentleman on the left there, the heavier set guy, that's Mitch. Mitch loved airlines. It's a curse. He started Allegiant in 1980 or 96, 7, something like that. And God bless him, he just didn't know how to do it very well. But he could start it, and he did it, and he put his software in, and everything was good. And so this is the get-go. He was in Fresno, where I used to live and where he started the company. And my partners gave me nothing but grief when I got into this. And I had lent Mitch money during the 2000s because he bought some airplanes from Boeing Finance, and they saw him coming, and he had to hush kit them. Forget stage 3 was put in place in 2000, and you couldn't fly an airplane if you didn't have it hush kitted, but Boeing was going to give him the money, and of course they didn't, so I gave him some money, and at the end of the year, he was just not doing well. He put it into Chapter 11. I was the biggest creditor, and while I wasn't planning on doing it, the world started coming apart in early 2001, and so I talked to a couple of guys I knew, and we decided to go after it, and we took it out of bankruptcy on July 1st. Well, guess what came a couple months later? 9/11. So, everything it happens for a reason. And while 9/11 was tragic to a fault, it was the best time to start an airline. Why is that? We didn't have much. We had 1 or 2 airplanes. But airplanes became very cheap. That MD-80 you see up there, or saw, was a $180,000 a month airplane. It now became an $80,000 a month airplane. Pilots were available all over the place. People were laid off like crazy. Everything was, much less expensive. And everybody was, just trying to regroup and figure out what to do. So we started off as I took over the airline, we wanted to do I had to be different. What did I do? It was all my money, and we had to make money right away. This is one of the most expensive businesses around to start up. David Needham, when he started JetBlue, raised $170 million. We probably put $3 million into this to get it going. So remember building your own tables and chairs and stuff like that? That was this all over again. But the key to this thing was I wanted to do everything. If everybody's over here, I want to be here. And if you think that you could take on guys that are in their own business, it's like if you have a pizza shop on the corner and it's Joe's and he's been there for years and he's got a clientele, the idea that you can go across the street from Joe and beat him in his own business, not to say you can't, but it's pretty arrogant. He's got customers and reputation and things like that. So our belief was to go after leisure customer, but our focus was on cost. So how do you reduce cost? First and foremost, it's how you schedule the airplanes. Hub and spoke, if you're going to take people to Las Vegas like that says, the marketing guy wants me to take all those airplanes and see those cities. He wants me to park the airplanes in Bismarck and all those places because that's the best schedule for selling. Well, how do you get maintenance people to Bismarck? How do you get parts to Bismarck? How do you, pay the overnights that you got to overnight the cruise? So we moved all of that to Las Vegas. So this day we have 23 bases. They're small little airlines, and our crews are home every night. They're in their own bed. If you're American Delta United, you're doing 3 and 4 day trips. So when you sign up for that lifestyle, you're away from home for half your life, or maybe not quite half, but a good chunk of it. So this is very attractive for us, and we were profitable from the get-go. We went to these small cities that I joked that they were, fields surrounded by, oceans surrounded by grass. They were isolated. They couldn't get out of Bismarck. How do you get out of Bismarck? Do you go with Northwest at that time and you pay $800? Well, we'd take you out and back for $200. So we stimulated the market. Now all of a sudden a trip to Vegas was very affordable. We sold hotels. Again, the automation, Mitch was able to write that in so we could sell packages. All of this stuff worked very well. And the other thing we did is we changed the pricing. Again, you may not remember, but back then, if you wanted low fares, you could get them, but you had to buy them 2 weeks out. Inside of 2 weeks, you had to stay over a Saturday to get a low fare. Well, in May of 2002, we changed that. We just did everyday low fares. And our traffic exploded. So we were doing 2 cities, Fresno and Colorado Springs, $75 from Colorado Springs, $59 from Fresno. And by August, our numbers were incredibly profitable. And we built all this stuff because we had automation, but we were willing to try stuff and do things. And so we played with this model up and through 2004, and we knew we had something. It worked. It was cash flow positive. Nobody was coming in on top of us. We could make it work. And then as we moved along in 05, you can see that we started in Florida, did that type of thing. And then this is us today. So we have 125 airplanes. We're a $2.6 billion company. We fly, 20 million people a year. So it's a real business. Having said that, we're a rounding error compared to Delta and, $58 billion business and the like. So very proud of this. I was the CEO through 3 years ago. And one of the most interesting things is I had never been in a big company. I didn't know how to run a big company. And I made a lot of mistakes, but was able to stay at the helm of this thing and stay with it. So in many ways, that's my most crowning achievement, that I could stay on top of a company that got that big. Because I probably should have brought something else in, but it was a lot of fun. Still is. I'm still the largest shareholder and I'm chairman of the board. So as I joke, I can spell airplane. I'm going to probably write another treatise like this because the industry is going to change in the next few years. This is the history of Spirit and Frontier, if you're familiar with them, from 19 on, which is a seminal year over here on the right. I gave you 17 and 18 with Frontier. And you can see Spirit made $500 million. That's $2 billion, 3.8 billion, 3.3 of expense. Go forward, they lost through 9 months $600 million. Now they're in bankruptcy now. Both of these carriers came under a model, the Franke model, as I call it. Bill Franke, brilliant guy, financier extraordinaire, and they were trying to be a Jack and the Beanstalk. They wanted to conquer the world. And so they were growing like a weed. In 2011, Spirit had 37 airplanes. Frontier was an afterthought. Franke got involved with Spirit, grew them. By 23, they had 215 airplanes, and Frontier, which he bought in 2013, had about 130 airplanes. So you've got 330, 350 airplanes. Franke had another 180 airplanes on order. And the reason you see these numbers with Franke, they've taken in $1 billion of sale leaseback money. So what's that mean? This airplane they have is so much in, the order book is so much in demand, and all this money from leasing companies, they buy the airplane for $1, they turn around and sell it immediately to a leasing company for $1.20. They've done $1 billion worth of that, and in 2019, the accounting rules changed. You can now take that money current income or reduce an expense. Well, that's not good accounting, and there's a technical reason, I can't tell you why, but they have been posting good numbers because they've taken $1 billion. I've taken that $1 billion out, and this is what their numbers are without the benefits of that accounting change. So they sit there. Spirit's all but dead. It's been bankruptcy. They own nothing. They have no place where they can call their home. We have that map. Those are our homes. We are doing nonstop flying. We're different enough. They're just trying to imitate the majors, and the majors are taking them out to the woodshed. So you're going to see a dramatic change in the next 3, 4, 5 years. We just announced a merger with Sun Country, another small carrier, but between the two of us, we'll be a $4 billion company. We're profitable, the most profitable percentage-wise in the industry. And so I'm very excited about that going forward. But fares are going to get expensive. They're not cheap now, but they're going through the roof. You used to think Southwest was where you went for your low fares. Not anymore. Not anymore. You're going to pay for bags on Southwest. We always paid for bags, but now you're going to know you pay for bags. Bags fly free, I always thought was a interesting marker for them. But anyway, this is the state of the business, and I actually think you're going to end up with 4 guys. If you go back to regulation, you came out of deregulation with your big carriers, United, American, some others have come and gone, Pan Am, Eastern, and the like, but you're going to end up with Delta, American, United. United was a big one, and they're going to be the successors in this business, and it's done. There's no more capital coming in. Just like any industry, when you get big and you can't keep growing, what do? You start working on the expense side, and the way you do that is you consolidate. So it's just going to happen. You can't raise fares. The last 6 years, well, Frontier's numbers in 19 they got $110 a passenger, and they spent $100. The first 9 months this year they spent $126 and still got $110. How do you crawl back from a $15 deficit? And these are big businesses now. The cash requirements to keep them going. This isn't a couple bucks from a local venture capitalist. It's big money. So that fare level is going to go up. The big guys are going to be able to raise fares. It's going to be interesting to see the politics of it. But you're going back to full regulation where it was very expensive to fly. And part of the problem is you have labor, which is controlled, single point of the pilot unions in Washington, D.C. are incredibly powerful people. They get what they want. A pilot today working for a 12-year pilot for Delta, American, United is making $370 an hour on a narrow body. And with the hours, that's a $400,000 a year job to work 150, 170 days a year. Great gig if you can get it, all right? Maintenance is hard. What's really expensive are stations. LAX, $50 a passenger to transit. So low-fare carriers are tough to go into an LAX and try and pass on $50. The other piece of this is, in 1975, there were 180 million people in the country and 150 million people flew. Last year, 950 million people flew, and we had 340 million people. The stimulative factor is gone, I think. We relied on stimulation. Lower fares, you get people off the couch. Today, there aren't many people that don't know about flying. And your ability to get them off the couch is going to be questionable. So you're going to have to stick to your knitting. There won't be as much growth. And the way you'll deal with it, the fares will go up. And airplanes, there's monopoly or oligopoly in airplanes. The engines are oligopoly. They're very expensive. You're getting to a point now where a low-fare carrier can't afford to even buy a new airplane. They're so expensive. You can't finance it and do all the things. So anyway, I don't want to be a Debbie Downer here and the like. Maybe I've already done that. But, from a purely parochial perspective, we're going to be in good shape. We'll do okay. The country's got incredible wealth that's being generated. So maybe there'll be people that'll come along and be able to start up a new carrier. But the last few startups have really, hit the wall and not been successful. But one of the things I want to do going forward is I want to examine why we're so successful as an economy and the like. And did deregulation really trigger it all? I mean, there's some interesting questions that deep finance would probably be interesting to ask, but it's interesting times. So with that, I'll stop. I'm being told that it's over. I think.